Imagine a young boy selling Coca-Cola, gum, and delivering newspapers. That boy was none other than Warren Buffett, now one of the wealthiest people on the planet. In the heartland of America, Omaha, Nebraska, a young Warren Buffett was already exhibiting signs of his future financial prowess. His childhood wasn't filled with the usual games and pastimes of other kids. Instead, he was busy running small businesses, like selling chewing gum and Coca-Cola, or delivering newspapers. You might ask, what was the driving force behind this young entrepreneur? His inspiration was ignited by a book, 1,000 Ways to Make $1,000. This wasn't your typical children's book, but it was the one that fascinated young Warren. It sparked his interest in the world of business and investing, planting the seed for his future financial ventures. These entrepreneurial ventures were not just about making money. They were also about learning the value of money and understanding the principles of business. These early experiences were fundamental in shaping his mindset towards money and business, paving the way for his future in investment and wealth creation. Warren's family background played a significant role too. His father, Howard Buffett, was not just a parent but also a mentor to him. Howard was a stockbroker and four-term congressman who instilled in Warren a strong work ethic and an understanding of the financial markets. His father's influence was a guiding light, shaping Warren's approach towards investing and his attitude towards wealth. Warren was a testament that the apple doesn't fall far from the tree. He was not just a chip off the old block, but a budding entrepreneur and investor, learning and applying lessons from his father and his own experiences. Even from a young age, Warren Buffett was not an ordinary child. He was a young entrepreneur in the making, his eyes already set on the prize, his mind already understanding the value of a dollar. It's these humble beginnings that sowed the seeds for the growth of one of the greatest investors the world has ever known. The journey to his first million started right here, in the heartland of America, with a young boy, a dream, and a relentless pursuit of knowledge and success. Education is the most powerful weapon you can use to change the world, said Nelson Mandela. For Warren Buffett, his academic path was the foundation of his billion-dollar empire. Buffett's journey into the world of finance and business began at the Wharton School. Here he was exposed to the rigors of higher education, but it was at Columbia Business School where his investment philosophy really took root. Under the tutelage of Benjamin Graham, the father of value investing, Buffett learned to look beyond the numbers and see the intrinsic value in businesses. This was the cornerstone of his investment approach that would later transform him into a billionaire. But Buffett's education was not confined to the classroom. He ventured into the world of business at an early age, learning valuable lessons about entrepreneurship and the power of reinvestment. Take, for instance, the pinball machine venture. This was no ordinary childhood adventure, but rather a calculated business opportunity. Buffett saw potential where others didn't. He bought a used pinball machine, placed it in a barber shop, and soon the quarters started rolling in. Instead of spending the profits, he reinvested, buying more machines and expanding to more barber shops. This was a masterclass in the power of compound interest and the art of reinvesting profits. These early years were formative for Buffett. They shaped his investment philosophy, laying the groundwork for his future success. But perhaps more importantly, they instilled in him a belief in the power of knowledge. Buffett once said, "The more you learn, the more you earn." He understood that knowledge is not just about acquiring information, but applying it strategically. He didn't just learn about business, he lived it. He didn't just study investing, he practiced it. His education was not just about earning a degree, but about mastering the art of investing. Buffett's education and early ventures were not just about making money, they were about learning the art of investing. His journey teaches us that the road to success is paved with knowledge, perseverance, and a keen eye for opportunity. It's not just about having the right tools, but knowing how to use them. And that's the true power of education. The year 1956 was a turning point in Buffett's life. He started the Buffett Partnership Limited, a move that laid the foundation for his future success. Now let's delve into the inception and evolution of this partnership that was instrumental in shaping Buffett's early investment career. Buffett, with his keen eye for opportunity and an unwavering belief in his abilities, pooled together his savings and investments from family and friends. With this initial capital, he embarked on a venture that would change the course of his life, the Buffett Partnership Limited. This was not just another business venture for him, but a platform where he could put his investment theories into practice, learn from his experiences, and fine-tune his strategies. In the early days of the partnership, Buffett was already showing signs of the legendary investor he was to become. He focused on undervalued stocks, companies that were overlooked by others, but held potential for growth. He believed in the principle of value investing, an approach that seeks to pick stocks that appear to be trading for less than their intrinsic or book value. This was a strategy that was not popular at the time, but Buffett, with his foresight and conviction, saw its potential. He was not just investing in stocks, he was investing in the businesses behind those stocks. He was not swayed by market trends or popular opinion. Instead, he relied on his in-depth analysis and understanding of the businesses he invested in. He believed in the power of long-term investing and held on to his investments, allowing them to grow and compound over time. Buffett's investment style was not just about making quick money. It was about understanding the value of a business, believing in its potential, and having the patience to wait for the results. It was this approach that set him apart from others and laid the groundwork for his future success. The Buffett Partnership was where Buffett began to refine and implement his investment strategies that would later earn him his first million. It was here that the legend of Warren Buffett, the astute and patient investor, was born. Investing is not just about putting money in a business, it is about understanding the business. This was the principle that guided Buffett's early investments. When we dive into the ocean of Warren Buffett's early investments, one name surfaces prominently: the Sanborn Map Company. This company was an anomaly, a diamond in the rough that few paid attention to. But Buffett, with his keen eye for value, saw its potential. The company had an insurance map business that was not doing well, but it also had a significant investment portfolio. Buffett noticed that the worth of the investment portfolio alone was more than the company's entire market value. This discrepancy was an opportunity, and Buffett grabbed it, ultimately acquiring a controlling interest in the company. This investment was significant, not just because it was profitable, but because it demonstrated Buffett's investment philosophy, a philosophy that focused on value and understanding the business. Buffett wasn't looking for quick wins. He was looking for undervalued companies with a potential for long-term growth. He was looking for investments that others overlooked. But Buffett didn't stop at Sanborn Map Company. He continued to explore the investment landscape, making strategic investments in a number of other companies. Each investment was a calculated move, based on a deep understanding of the business and its intrinsic value. Expert analysts have long studied these early investments and the principle that guided them. They've concluded that Buffett's success didn't come from luck or chance. It came from a profound understanding of business, a keen eye for value, and the courage to go against the grain. It was this unique approach to investing that built the foundation of Buffett's growing fortune. These early investments were not just profitable, they were stepping stones to Buffett's million-dollar journey. They laid the groundwork for the investment strategies that would eventually make him one of the world's most successful investors. Each investment was a piece of the puzzle, fitting together to create a picture of strategic foresight, perseverance, and above all, an unwavering belief in the power of understanding business. The path to $1 million is not a straight line. It is a journey filled with ups and downs, victories and failures, and Buffett's journey was no different. Warren Buffett, a man now synonymous with wealth and investment wisdom, didn't amass his fortune overnight. His net worth, like a well-tended garden, grew over time, nurtured by astute decisions, patience, and an unwavering belief in his investment philosophy. A significant milestone in Buffett's financial journey was his initial investment in Berkshire Hathaway. The textile manufacturing company, initially seen as a dying industry, was considered an unconventional choice. But Buffett, ever the contrarian, saw potential where others didn't. He recognized the value in the undervalued, the diamond in the rough. Buffett's investment in Berkshire Hathaway wasn't just a financial one, it was a commitment to his principles. He believed in investing in what you know, in understanding a business thoroughly before putting money into it. This philosophy, simple yet profound, was a guiding light in his journey to his first million. But it wasn't just about making smart investments. Buffett's path to $1 million was paved with strategic decisions that compounded his wealth over time. He understood the power of compound interest, of letting his money work for him. He knew that time was his ally, and patience was his greatest tool. And so Buffett continued to invest and reinvest, to buy and hold, to trust in his strategies even when the market was volatile. His approach was not about making quick money, but about building lasting wealth. It was not about chasing trends, but about identifying enduring value. Buffett's journey to his first million was not a path of least resistance. It was a path of perseverance, of unwavering faith in his investment philosophy, and of strategic decisions that multiplied his wealth over time. It was a path that required patience, foresight, and a deep understanding of the investment landscape. Buffett's journey to his first million was a testament to his investment acumen and his unwavering belief in his strategies. It serves as a powerful reminder that the path to wealth is not about quick wins, but about long-term strategy, patience, and persistence.